Hi, everyone. Welcome to this week's edition of the Grain Gauntlet. We are filming this the day after our very interesting USDA report for January. So obviously, there's going to be a lot of questions about that. Questions about where prices are going to go. What's the next move? Patrick, are you ready to go?
Well, after yesterday, I don't think I'll ever be ready again. But yeah, let's give it a shot.
Right. All right, sounds good. All right, so before I get into the questions specific to corn and beans, I'm going to start with this one. It says, is there a chance of a revision from the USDA on these numbers in the near future? Any chance they change anything?
No,
Yeah, I didn't think so. I
no.
didn't think so.
We would love to see them revise things, but they just came up with all this work to give us these numbers. I don't see any revision to the old crop stuff, except for demand as we move forward, because we see increases or decreases, but not to production till at least September.
Right.
Unfortunately.
So yeah, that definitely answers that question. These are the numbers, and yeah, probably not much hope that they come out with any kind of corrections anytime soon.
Yeah, I would not believe that they would do that. I've never seen that happen very frequently, where the USDA admits, since they got stepped in as the lead statistician, I haven't seen any changes.
Okay.
And unless it's report.
Okay. All right. So then we move on to what we do have to work with. The next question is, will corn rally at all?
Of course it will. Even in 17 and 18 and 16, we had big ending stocks like this. Typically we had about $70 to $1 range. Okay. The low for March corn has been $4.10, 70 cents is $4.80. We could easily get there. What would drive that? Well, I think I'll talk about that at the end if nobody asked me that question. How's that?
Okay. All right. Fair enough. So the next question is, have you changed your opinion on soybean price potential?
A little bit. It's going to be harder to get up to $12, but the fundamentals went from 280 to 350 or 290 to 350. I'd much rather have seen it at 230, which I think was more realistic. I still do, but we got to live with 350. Can we get a rally? Sure. We can have weather issues here in the United States. We're not going to have weather issues in Brazil. They're starting to harvest in Mato Grosso. But we could still have issues down in Argentina. Really, what's going to happen is less producers selling at the low price and more people wanting to buy at the cheap price. That will get things moving. So cheap prices.
All right. So you put a little bit more of analysis on corn on hold for another question. So I guess this would be the spot. This one says, what kind of adjustments can be made to hedge account long positions following a nosedive like yesterday? I mean, I guess mainly with corn.
One of the things that I do on buybacks, this is my personal strategy. I work with my personal guys, is when I do a buyback, I never say never. I rarely have a limited risk to the downside. My most common coverage for a buyback that I had on before this report was buying 2 puts and selling 1 or selling 2 against it, so that if the market moved down big, the guys that were 2 for 1 actually ended up being negative in the account and added value at the end of the day yesterday. And so I don't want to get killed on a buyback. Why? If you get killed on a buyback, you're losing on the cash you haven't sold, the cash that the crop you haven't grown yet. You're losing on that potential for next year, and you're losing the hedge account. And you're not giving yourself an opportunity to buy back cheaper. The move we had yesterday, I think 410, 415, that area is probably going to hold. It might take a day or two. But if I can get these guys almost even in their hedge accounts with just a little loss and buy back from 415, tell me what the difference is, us making money from 415 to 455 or from 450 to $5. There's no difference. I mean,
right.
You're making 40 or 50 cents. It doesn't matter, but you can't do that if you get your butt handed to you in the hedge account. So on buybacks, super important always to limit your risk however you can so that you have ammunition to fire. Because I believe a buyback from 410, 415 has a much, much greater probability of adding 30 or 40 cents to a sale than one from 450. In addition, you would need, as a farmer, that 40 or 50 cents much more if we rally to 450 than if we're rallying to 490. So you have to have ammunition, so you have to have protected positions on anytime you do a buyback. If you're protecting the price and hedging, different story. You want to get as aggressive as you possibly can to make sure you get the majority of that higher price. Make sense?
Right. Yep, absolutely. All right, and then we'll close it out back with soybeans, more of a like long-term outlook, I guess. You've covered this a little bit already, but the basic question is, what will it take to move beans over $11?
Farmers not selling. Simple as that. They say I can't make a go at this, and end users need the beans, right? So they're going to push up the price to buy the board, push up the price. I expect the same thing with corn. Commercials should be buying this market to protect this low price. And once they do in numbers, they are stronger than funds. They can push them out, and we can go right back to 11 and 450, maybe even 470. What this report did, especially in corn, but also in beans, it took away the crazy. Okay, we're not going to 550, guys. We're probably not going to 5. We're probably not going to 13 or 14, but going to 11, 12, that's still very possible and probably even likely.
Okay, good. And I think that's a pretty realistic take, and definitely something that hopefully can help put people at ease.
Yeah, one of the things I can tell you I'm doing is I had a bought put in beans and a sold call and a sold put at $12 in July soybeans. So what I did today and what I'll be doing is moving the sold call down to $11. What that does, it creates a profit range between 11 and 12. I don't hit a home run grand slam and win the ball game, but I get a double. Okay, I make 50, 60 cents between 11 and 12. I only have to get to 11 to make that money. Okay, that's fantastic. Where before I'd been making about $1.10 on a move to $12. I won't make that at $12 anymore, but I have a better probability of having success. And with the so-called giving me more premium, if it never rallies, I'm really safe with my butt put on the downside, which again is always a key in a buyback, is to be as safe as you can. Fixed risk trades, I know you put some on. That's awesome. You can only lose what your fixed risk is. When you're doing buybacks, it's what you have to do.
Yeah, right. Okay, good. Well, I think everyone knows what to do. If that sounds like something that would interest them, give your advisor a call. We can definitely put that kind of position on. And other than that, yeah, let's hope the worst is behind us, and hopefully on the cash side, even that we start to claw some of this back over the next few months.
Yeah, I know everybody would love to have 30 or 40 cents of profit on top of a 480 sale. Now it's imperative that if we can get a rally here, we can add 30 or 40 cents to a worse sale. That makes it a whole lot better. It makes you a whole lot more competitive. This is not the time to freak out. As one of my clients told me today, he said, Pat, there's always time to panic, and always another day where you can panic. Just don't do it today.
That sounds good. So, good advice. Great.
All right. Good seeing you.
Thank you.
Have a good week, everybody.
Take care, everybody. See you next week.